Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/RIVE to receive the top 10 stocks to buy right now. Two of the most talked about stocks on the market, Rivian and Tesla, are well off their highs right now. As we're recording, Rivian is off 87% from its all-time high. And remember, this is a company that just went public a year ago. Tesla is actually down 64%. So I wanted to talk about what is going on with these two companies and what the future looks like. To do that, I asked Jon Quast to join me. Jon, how are you doing today?
Hey, doing well, Travis. Thanks for having me.
Let's touch on Rivian because I think Rivian's in an interesting position right now. They have enough backlog to probably get them through 2023 and into 2024, maybe even through 2024, depending on how quickly they're able to ramp their production. But they're making a truck and an SUV and then a commercial vehicle for Amazon, and then apparently are selling to other customers as well. What I think is interesting about Rivian's place in the market is if they can get their operations right and they can generate Tesla-like margins in that gross margin range of 25% or so, they could be a fairly profitable company fairly quickly. And the irony of where they are in their current phase of the market is they're in this nascent, high growth phase where to sell out all of their vehicles, they don't need to sell 1.5 million vehicles. They need to sell 25,000 vehicles this year. And next year they need to, up that to 50,000 or maybe it's 100,000, but they're nowhere near the scale that Tesla is. So a small drop in demand is not meaningful, just like it was with Tesla when Tesla first went public in 2012, 2013. They had, for years, they had more demand than they could possibly fill. Rivian may ironically be in sort of a similar position coming out of this recession, inflationary environment, whatever this ends up being over the next couple of years. And in 2024, sort of hit the ground running in a more normal economy and just be able to ramp up production. I think that's an interesting thing to think about, is like a recession is going to hit Tesla harder than it's going to hit Rivian because Rivian is such a new company and it has such little scale. So does that make you think about these companies differently, or is Rivian just going to deal with the same stuff maybe 6 months or 12 months later than everybody else?
I think you're 100% correct, is that if we were talking about how used car prices likely, they're already coming way down, but they're still astronomically higher than they have been historically. You would expect that to continue crashing. You'd even expect used car dealerships to go out of business and liquidate inventory. That is actually very much on the table. And so you're going to see a collapse in car prices across the market. That's going to affect consumer decisions when it comes to Tesla, absolutely. But new car dealers all over the place. But also you're looking at those interest rates. Those are high. People can afford less. Demand is a very big issue when you're talking about a company like Tesla who already has scale. It's not as much of an issue when you're talking about a company like Rivian that is still scaling. It's still so new that it does have all the demand that it can handle and more. So I think that even if you do see demand come down for Rivian, they're still going to have more demand than what they can handle. So I don't think that it's as big of a deal going into 2023 for Rivian as it is with Tesla. And quite frankly, you don't want to see Rivian meeting all of its demand right now, in my opinion, because this is so new. Correct me if I'm wrong. They started production this year in 2022. This is a company that still needs
I believe September 2021 was when they delivered their first vehicle.
Okay.
But this year is the first year that they're having any sort of meaningful sales. I think there was just over 1,000 vehicles in 2021. Yeah.
Okay. So, but the point is that it's very, very new and it is scaling up. There are going to be problems. That's how it works. Mm-hmm. You scale up, you find what isn't working, what is working, and you make the changes as you go, improve how this works, and then you do hit that scale. You don't want to see them scale up too fast, make the mistakes, have to recall, have things not work, damage the brand. No, you want to see them do this very methodically, very intentionally, and build that up in a sustainable way. And so I would say, yeah, absolutely. When it comes to the demand side of new vehicles, they already have what they need. And if it fluctuates in there, I don't think that really does anything to Rivian's business. To me, I don't think that Rivian's in a place where the market's going to reward it, though, in 2023, because it doesn't have the scale that it needs to be an apt Tesla comparison. So, and they even said this in their most recent quarter, like, hey, we did an incredible amount of manufacturing and delivering, unprecedented. I think it was more than 60% quarter over quarter growth. Outstanding. And they're still nowhere close to where they need to be to have the scale to have positive cash flow. They're thinking very, very big. And so they've made this factory in a way that, oh yeah, it's an order of magnitude more before it is actually profitable at that scale. So that to me is not a scenario that the market is going to reward in 2023, something that's going to continue to be cash burning. However, they can handle it. That's the stage of the business that they're in.
Yeah, I think Rivian is in a really interesting spot, because if they start proving that they can scale the business, if this Georgia plant continues to be built, apparently they're building it in lieu of losing $1.5 billion of subsidies from state and local governments. We'll see where that ends up, but it's not resolved, and there's still shovels in the ground there. So that's really interesting, because they're saying we've got to expand as quickly as we can. The other thing I want to note too is Tesla is making effectively a small SUV or sort of a sedan is sort of their two markets. Rivian is making a truck, a pickup truck, which there is one competitor, the Ford F-150 Lightning, which apparently is selling as fast as they can possibly make them.
Yeah.
And they're making a 7-seat SUV, which today there are exactly 0 competitors. So that will change in the future for both of those vehicles, but it's going to be a little bit like the situation Tesla was in the middle part of this past decade, where they were kind of the only option. If you wanted a electric vehicle that got 250 to 300 miles of range, there wasn't a lot of options outside of Tesla. So that'll be interesting, and will maybe help it get to the point where it is in a more sustainable position. I'll say that I'll give my thoughts on the two stocks, and then I want to hear what you think. But Rivian is one where I'm very intrigued right now. They need to prove it to me before I become a shareholder. Tesla is one where I'm not comfortable paying the premium that the stock still trades for, with everything that's going on, not only with the company's operations, but also with Elon Musk. I mean, I think it's likely that he probably steps down as CEO of Tesla over the next 12 to 24 months. I mean, what happens to that brand and that shareholder base if and when that happens? He said in the past he didn't want to be the CEO of Tesla in the first place. So I think he's more than happy to exit if he can. He's been selling more stock even just in the last couple of weeks. So I think the writing is on the wall there. But what do you think about these two stocks?
If I was forced to pick a stock for 2023 and beyond between these two, I would invest in Rivian over Tesla. And mostly because of all the issues that we've talked about with Tesla going into this, I think that demand is going to fall for new vehicles in 2023. And I think that it hurts Tesla more than it does Rivian. And also the valuation premium, the assumptions that are baked in there with Tesla, I think it's too overdone. With Rivian, I don't think that valuation is much as an issue because of the stage that they're in their business life cycle. That said, I'm not investing in either of these companies right now because I am not convinced that Rivian does make that jump from cash burning machine to cash generative machine. Now, that might just be my own ignorance, and we all have to stay within our circle of competence, and I have not ever invested in a car company. And so that is something for me that I'm not sure that Rivian does turn that corner, and that might be my own ignorance. But at the same time, that's why I am not buying either of these stocks today.
All right, so we have our skeptical hat on with both of these. I think there's going to be a lot of questions to answer over the next 12 months, particularly with both. So we will see what the delivered numbers look like, specifically from Tesla. That's going to be really, really closely watched, and then demand for the first quarter, because that's going to be a level playing field with everybody else from a subsidy standpoint. So that will be interesting as well. Thank you, Jon Quast, for joining me. If you don't already, please subscribe to RIVN Investing. there's a little button here on YouTube that makes it handy for you. Give this video a like, and then, of course, leave your comments below. We'd love to hear what you think. We will see you here again next time.